Hey guys, Griffin Cooper here at Ablewaytech. It's December 4th, 2022, and I wanted to do a debrief of our trades from this Friday on December 2nd. So the first one we have here is Cleveland Cliffs now. Uh, this is one of our favorite symbols. Now, the strict Kata challenge uses EWZ and DIA strictly, but what I'll show you later is what I've been noticing is that EWZ has been pretty quiet. And one of our tasks of trading is to find the mover, to find things that are moving well, and that's one thing we've been doing with Cliff, with X as well, U.S. Steel, Devon Energy, DVN, Alcoa, AA. We've been adding a couple more symbols so that we can find things that are moving. We find that the metals move a lot intraday, and those are good trading vehicles for day trading. So anyway, we have here Friday's charts. This blue vertical line is where I started trading. Again, I haven't been able to trade in the mornings much, so looking for something in the afternoon. This green horizontal line was the high of day from Thursday. And so what we saw when we started trading was that Cliff was one of the strongest in our set of symbols, up over 3%. And this is probably one of my favorite setups, at least lately, is that something it's a relative strength winner. So it's up the highest percent above the high of day yesterday. And then it pulls back into, we call this a harsh winter. So when the MACD line crosses below its zero line, this RL, this regression line 10 turns red. And we have a move down like that. We have an automatic low risk idea because we have just that. Basically, the hypothesis that this was an overreaction, this move down, and that just a return back up to the previous high gives us, a 2-to-1. So we saw that happening as soon as we started trading. It had this RL10 line had crossed over the dragon, which is this orange line, which kind of dictates the turning points. It's the Bollinger Band 10 period plus or minus half a standard deviation. And we saw that this PSAR, which we have tuned, it's tuned right to the RL10, had flipped. So we had what we consider a supported spring crossing. We had that harsh winter down here. We had the RL10 had crossed the dragon here, and it had turned to spring, which we can show here with the yellow line on the RL10. That means the MACD had started to turn and move up from below the zero line, which is very good. And then finally, we had a PSAR flip here, where as the RL10 crossed over the PSAR here, it flipped, showing us an upward bias. Now, I got started trading right here, and what I'd seen is that it had gone up, and then this bar had come down. I didn't want to enter with that kind of bar where it's moving down. I want to enter on momentum. So basically what I said was, what will make me think this thing's moving back up? And it would be a breakout above this kind of noise right here, this first little pullback. Because if it pulls back here and then keeps going, that's failure to fail further. If it's going to keep going down, when it went here, it would just keep going, but it didn't. It found support again at that high of day from yesterday, which is why I really liked it. And so when it started to move back up here and break out above this little pullback, I bought it there with the stop pretty much right down here. We were just using an R10 for our stop, which is, as you can see up here, 11 cents. That's kind of our minimum manageable risk box that we can use to operate intraday on these 3-minute charts. So we took that, and I just used a simple 1R, just a trail stop based on my initial risk. So it basically kind of mucked around sideways for a little, and then after about a half hour or so, it did start to move up nicely. At this point, it got interesting. Why? Because it broke above this statistical resistance line from this previous high. And so then it came up, pulled back almost like clockwork right to that statistical resistance line, which now became support because it broke up past it and then took off again. This exit was purely just a time exit. If you look, it was the session for out here in the West Coast closes at 1 p.m. It was like 12:55. So if I don't have it closed by then, I just exit the position, rang the bell, got paid. I don't like to hold overnight risk. That's one of the great things about day trading. I can sleep well at night knowing there's no overnight risk. So that was just a profit-taking exit, which was pretty nice. We ended up with a 1.88, almost 2R on that one. So that one felt pretty good. The flip side of that is here we have EWZ. which is our normal trading vehicle for the Kata challenge. And that's the one I wanted to talk about. Was it here? I forgot to put the line. It was around here at 10:30. I started trading. So one thing that's been happening a lot lately with EWZ is that in the afternoons, it just peters out like this. And that's not great for trading, right? We want to find the movie, we want to find things that are moving. So Cliff was nice, but here's an example of something that's just not moving, where it had that same downward move. This was actually a harsher winter. You know, it had 2 legs down. It was a little bit steeper in its move down, found support here at this previous low of the day. We had the same supported spring crossing pattern, right? With the harsh winter, all this red, it crossed the dragon, the RL10 crossed so that the PSAR flipped. Again, it was the same thing when I started trading, you know, and I saw this pattern, it was moving down. So I wanted to wait for a breakout above this little noise here. So I waited for that, took it, it immediately failed, ate the loss, minus 0.63 loss. And then this is the other half of the SSC is that what's beautiful about that pattern is that when it doesn't work, it's an automatic short because we just had this big down move. So we're not surprised when this SSC to the long side doesn't work and it just fails again. So I just stopped and reversed, went short. And this is where it got a little interesting to me because then it didn't follow through to the downside either, right? It just came right back and basically scratched it. So what I want to show here is that what I started to put on the charts was what we use called our Z3 line. So that's this red and yellow line. This is a Bollinger Band, which we know is adjusted for volatility. It's a good measurement of volatility, and it adjusts, it's adaptive. And we use a 30-period Bollinger Band, and this is plus or minus 3 standard deviations. The point is this is an extreme move when it comes out there. But more importantly than all that, I just want to say that what we really like is that on this Owl Bundle and Thinkorswim, and you can do this in other platforms, TradingView and stuff, is what we do is we've programmed it specifically so that if you see this frog box here, this green box, so that's what we calibrate through statistics as kind of the amount between signal and noise intraday. That anything above bigger than this amount, for us, it's 36 cents on EWZ. If it's larger than this, that can show a real move, non-noise signal. If it's anything smaller than that, we're kind of operating in the noise, like over here. So what we've done is we've tuned this Z3 so that when these Z3 lines pinch, showing that there's this compressing volatility, and they pinch smaller than a frog box, so that shows an unusually quiet market. And since we're trying to find the mover, we're trying to find things that are moving with volatility. That's not where we want to be, or this is what happens. So that's why I wanted to show this one particularly, because it's a really great way to stay out of sideways markets, right? Because when we see here that these Bollinger Bands compressed so much and they turned yellow, that just showed that it's more likely to have this kind of sideways quiet channel going on where price doesn't move that much. So these Bollinger Bands, the Z3 particularly tuned to this frog box, can really help us stay out of sideways markets. When we find the mover, we want to see it red like that. We want to see it expanded to see that things are moving. People are pushing this thing around. And then when it compresses like this, that's a good signal for us to stay out, especially when we have something like this. I mean, this to me is the perfect example because we have a move up, it doesn't go up. We tried to go short, doesn't go short. So if it's not going up and it's not going down, it's just going sideways. And why stay in that? You know, head for greener pastures. That's what we did. We went to Cliff and ended up making 2R on that. So 2R, about 2R, then minus 0.75. So still profitable day, a little over 1R. So that was good. Yeah, I think that's all I wanted to show. If you're more interested in these kind of indicators and techniques we use, you can check out Ablewaytech.com or also tortoisecapital.net. Thanks for watching.